Hello and welcome to Moving Iron Podcast Morning Market Roundup. Well, it's not really morning right now, I guess, but Market Roundup with Chip Nellinger. So, Chip, man, they had we talked on Wednesday, and there was going to be a report that came out on Thursday, and the markets rebounded quite nicely to what the report had to say through Thursday and into Friday. Just got my alert here. It looked like the markets opened up down over for the overnights going into the first part of the week. So, give me your reaction to that report and what you're thinking about the outcome there.
Yeah, the market really took those reports pretty well. For one, corn yields went down a half a bushel. They expected them to go up a half a bushel. So that was obviously supportive to the corn market. Beans, they were looking for just big bearish increases in yields. Only went up 0.3 of a bushel. But here's where it really got interesting. They cut 600,000 acres out of the harvested acreage number. So that's about, if you figure it, 52.8 bushels or wherever they were at. That really kept the carryout from growing that much. It went up 45 million bushels, but not as much as expected. So everyone's short beans. The funds are short. Expecting this big bearish report, and we didn't get it. So the market rallied as a result. Now beans are still stuck in the middle of the range that they've been in for quite some time. But corn broke out to the upside. If you just look at the corn chart, which a lot of times we can debate all this fundamental information. It's raining, it's not raining. The carryout shrunk, the carryout went higher. If you just look at a chart, sometimes it'll tell you. And the corn chart looks phenomenally good, like we're going to go higher. Now, as we record this, we're down just a little bit. Not surprising because it's an overnight, Sunday night, not much going on. We had a nice rally. I don't think that matters one bit. I think the corn market still looks good for higher. If you want to talk about fundamentals, it's pouring down rain here in Illinois. There's more rain coming in the western corn belt. They've had massive amounts of rain. This is not the greatest harvest in the world, right? We still have 2/3 of the crop in corn and beans to get out of the field, and not a great forecast. Now it's better than it was. There's some periods here of dry weather and clear weather, but if you just had 20 inches of rain in the last 3 weeks, you need more than 4 days of dry weather, right? You need like some sun shining and some heat, and we're not going to get that. Here in Illinois, we're not going to be north of 60 for like 8 days, 9 days. So it is cooler than expected. It's wetter than expected. It's not great bean cutting weather. It's not great for what corn is left, and there's a lot of it left. So, the path of least resistance right now is for higher in all these markets. We'll see what happens in the November crop report. But, you and I had talked about this for quite a while. Just in the state of Illinois, they had us 13 bushels higher than a year ago. I didn't think that was even remotely possible. They went down a couple bushels. It's going to keep going down. I'm not saying it's worse than a year ago, but we're certainly not 13 bushels higher than a year ago. And the longer this cold, wet weather sticks around, the more field loss you're going to have. Stands are horrible. You got corn going down. People are going one way in beans because beans are going down. It's just kind of a disastrous harvest in a lot of ways, and that does not bode well for yields. That's not a big crop getting bigger type of a situation. So we dodged a bullet with that report, and we'll see what happens with the weather. But technically, this market looks good for some further upside going forward. Not that we're going to just run straight up. I'm not saying that. But you can start making an argument that maybe the worst is behind us now.
Right. Yeah, I mean, back to the point on the weather. This morning I woke up out here. We had 20 degrees and 7 inches of snow. So we had and they're just now starting to get into the field with picking corn. So that's going to slow them down tremendously out here for a while. I think end of the week we're supposed to be up into the 60s by the end of the week, but there is some chance in there for some other weather events and those kind of things. So the weather's starting to play a bigger factor than it has been in probably a few years, especially what we see down in Oklahoma, Kansas, Texas, where it was so dry for so long, and now you're looking at historic flooding that you're seeing down there between two different tropical depressions that kind of hit into one spot, plus the hurricane event that you have off into the southeast. There's going to be some big changes just because of the weather in the marketplace.
Yeah, there's a tremendous amount of corn left in the field, a lot of beans. Like you said, it's just really weird. We, Friday here, it literally went from let me get this right. On Wednesday, it was like 85 degrees here. This is no exaggeration. 85 degrees in central Illinois with the air conditioning on. On Friday, it was 36 and snowing.
Yeah.
And it's just like you mentioned. There's rain. I read a story this morning. North Dakota has had like 19 inches of snow so far.
Yeah.
I mean, they just barely got to start with harvest up there.
Yeah.
And it's not good. And I don't want to build a big bullish situation, right? We're gonna get the crop out of the field. We always do. It might be February. It might be March. We always get the crop out of the field. But the longer and the later this gets, the more you're going to shave off. It's not 10 bushels nationally. It might be a bushel or two. It might be 3 in corn. It might be a bushel or 2 in beans nationally. But the bottom line is the crop's likely not getting bigger. It's getting smaller. And we've already digested the biggest yields. So the path of least resistance now, with the funds being short, it's October. We've probably passed the point where a harvest load comes in. They need to get out of those short positions. That's a buying situation where they exit those short positions, and it's going to create a little buying here. So it's a good situation. But I would tell you, any producers out there looking at this, watching this, don't get all bulled up that we're going to go to $5 corn and $12 beans. Right? Look at your gross dollars. Look at where your yields are at. There's enough carry in the market if you all are in storage. You got to reward this rally that's coming over the next couple of weeks. Don't be afraid to sell it because the gross dollars are there. And you also have to look at the 19 crops as well because this acreage thing is really crazy. As crazy as I've seen in a long, long time. You would think it favors corn, but $40 to $60 an acre, nitrogen costs are going up. Lots of cash flow and working capital issues. Bankers are going to be involved. So I'm not a big believer yet that we're going to plant 4 or 5 million more corn acres like a lot of people think. So this thing's crazy. It's insane market. I've never seen a market like this in a long, long time. The tariff situation, when are we going to get that figured out? Who knows? This thing just gets a little bit crazier every day, it seems like.
Yeah. One question here, and then we'll wrap it up here. So with the hurricane situation that we saw in the southeast and the amount of cotton that got destroyed, obviously the cotton prices you're going to see I would assume that you would see a fairly big jump there. If that does happen, do you see more, maybe some wheat acres in Texas, Oklahoma, Kansas get dispersed and put into cotton if the cotton price jumps way up?
Yeah, absolutely. We haven't even talked about that, right? With all this wet weather, there's portions of Kansas and Oklahoma that have had 6 to 8 inches of rain here in the last couple of weeks, two and a half weeks. Some of those areas get, 16, 18 inches of rain annually. So they've had in 2 weeks more than just call it a half of what they get in a year. Well, it's not the greatest time in the world, right? So if that continues, you're going to pare back potentially planted acreage in wheat. That becomes supportive in wheat. We haven't even talked about that. Wheat's been going sideways for 6 weeks. I think wheat and corn especially may have an argument that you could have a nice rally. Acreage could be, at risk here as far as getting too late in the time frame. Maybe they're going to still plant wheat, but it's going to be a lower, acreage potential. Maybe they're going to switch wheat to cotton. This acreage thing is really, and you're not going to figure it out right now. I mean, you will on the wheat, obviously. But, cotton, corn, beans, that's going to be something that still is going to be debated for the better part of 4 months, 5 months here until you get into spring. Mm-hmm. And this thing is really going to be affecting the market. And this thing's, 3 weeks ago, we thought this is just cut in stone. It's just the massive crop getting bigger, and we're going to go to, $7 beans and $3 corn. Well, that's not the case now. And you've got all these interesting acreage scenarios with Mother Nature playing a big hand in this. And that's what it always boils down to, right? We're at the mercy of Mother Nature, and she's not being the friendliest right now.
Yeah. So that report came out Thursday, and how did the cattle market react there towards the end of the week? It looked like there was a bit of a dip in some prices there.
Yeah, cattle didn't have the greatest week in the world. We had a lot of stock market volatility,
right.
Big down week in the stock market. And when there's not much news to talk about, the cattle market gets highly correlated with the stock market. So it's October. Historically, the stock market has a poor showing in October. You're seeing that again this month, and that's spilling over and hitting the cattle market. But with that being said, we're about 116-ish on the December contract. You're going to find good support in this level. You really support well this week. So that doesn't say we can't go a little bit lower, but I think you're going to find good buying on the breaks in cattle here. I think that, by the time December cattle go off the board, you're going to spend some time north of 120. So it's probably a buying opportunity, in an area not to get panicked about. If you do go a buck or two lower in cattle, I don't think it's the end of the world. Just be patient. But the cattle market is not acting real great. The hog market isn't as well. I think most of that is correlated to the break that we've seen in the stock market here this past week.
Yeah, there's been the stock market. They were selling on the speculation of inflation, and that's really what that was coming down to. They were worried about interest rate costs and how that inflationary patterns and those kind of things. So, the stock market and the cattle market do have a pretty distinct relationship with each other when you start looking at how the ebbs and flows of those marketplaces.
Yeah, and when you see this break in a stock market like this, it's in the big picture, it's not that big of a deal. In the last 2 months, it's a big break. But you do have a lot of money flow, and right, there's billions, if not most likely trillions of dollars that flow in and out of the stock market. So if there's a situation here where they think the stock market is overvalued and going to have a deeper break, a lot of that money finds a place and they go to something that's cheap. They don't necessarily want to make a lot of money. They just don't want to lose any more money.
Right.
So, what's cheap? Well, raw assets are cheap. Corn, beans, wheat. In the big picture, hogs are cheap, relatively speaking, even though we rally $10. In the big picture, $116 cattle are cheap. We've been 150 to 170 in recent years. So that, definitely needs to be watched. If the stock market breaks further, that's going to flow some money into commodities, and grains and livestock are going to be the benefit of that. So the stock market definitely is something to keep an eye on here for the next 2 or 3 weeks.
Right on. All right, Chip. Well, I think we've pretty much covered the report and kind of what the side effects of the report and how it came back out. So you talked about every week, every time we're on here, you guys want to work on a plan or build a plan or look at their plan. What's the best way to do that, Chip?
Yeah, just give us a call at the office, 309-550-7213. It's never the wrong time to talk about a marketing plan, a risk management plan, and more importantly, how you're going to execute that. It's one thing to have the plan. Everybody can do that on the back of an envelope, but how do you execute that plan and change it when you need to? So we'd be happy to chat with you.
Right on. All right, Chip. Well, we'll catch you on Wednesday. Until then, have a good first part of the week, and we'll talk to you then.
All right, you too. Thanks, Casey.
All right, thanks, Chip.